Hey guys, this is my first video on the weekly wheel strategy, where I'll be showing what stocks I like for the wheel in the upcoming week based on technical analysis. I'll also be using paper trading to sell puts and calls based on the TA, and each week I'll go over the performance of this strategy compared to the S&P 500. None of what I'm saying is financial advice, it's just my opinion. So with that, let's dive into the charts with the first stock I like this week, Tesla. There's a few reasons I like Tesla this week. First, when looking at the RSI, every time since last January that RSI has been in the oversold region, Tesla's price has bounced significantly to the upside. This yellow line is a 50-day EMA, and during all of these bounces, price at least reaches, and most of the time it breaks through the 50-day EMA, except this last time here, but price still rallied until it reached the 50-day here. The RSI is also showing bullish reversal divergence since RSI is making higher lows while price is making lower lows, indicating that this downtrend that Tesla has been in may reverse to the upside soon. Finally, this downtrend that Tesla's been on has formed this descending channel where the bottom portion has served as support, and every time price has reached it, it's bounced to the upside to at least reach the 50-day, just like the RSI. So I like Tesla this week. Moving on to the second stock, Mara, the first thing I want to notice is this price pattern that's been repeating for a few months. First, price has a sharp run up to this resistance level, and then it has a sharp decline back down into a consolidation period around the 50-day EMA. Price consolidates near the 50-day until it exits the consolidation and then heads higher again. These white boxes highlight the consolidation period, and it looks like price is nearing the end of the consolidation before heading higher to the top resistance again. We can also see this pattern on the MACD indicator. When MACD flipped from green to red, price sharply declined into the consolidation period, and when MACD flipped back to green, price headed higher. At our current price, we can see MACD flipping from red to green. This indicates that price may move higher like it did last time when this happened. So I expect MAR to head higher to this resistance level, or at least consolidate near the 50-day EMA over the next few weeks. Both outcomes are great for the wheel. The third stock that I like is ALT. ALT is a volatile stock, which is good for the wheel since a higher implied volatility means more premium per collateral. Similar to Mara, there's repeating price action over the last few months, when price initially stalled at this level, but then it eventually broke through and then came down to retest it and consolidated near the 50-day. During this consolidation, price held the level and then moved sharply higher. Over the past few weeks, price came down and it tested this as support again. The support held, and now we're consolidating near the 50-day and might be heading higher soon. Now, I'm not sure if ALT had sharply higher here or continues to consolidate near the 50-day, but I do think this key level holds as support, so I like the idea of selling puts on ALT that have a strike price near this level. Also, there's a slight bullish continuation divergence in this uptrend as price makes a higher low while RSI makes a slightly lower low. Moving on to the last stock I like for this upcoming week, Riley, another stock with a high implied volatility. This stock has been bouncing between these two levels for about 5 months now, with quite a few touches on both the top side resistance as well as the bottom side support. Last week, price once again bounced off to support. Now, I don't think price necessarily has to rally all the way back to the top level, but I think the support continues to hold. So similar to ALT, I like the idea of selling puts with a strike price near this support level. And if price does fall in this upcoming week and the put gets assigned, the high implied volatility of Riley means that selling calls would give a high premium as well. So I wouldn't necessarily mind getting assigned this stock as long as price stays between these two levels. This spreadsheet will track the options sold and the shares held using this strategy. I'm assuming that I'm giving myself $50,000 of Monopoly money to play with this and keep track of progress. Now that I have my picks for the wheel, it's time to sell some puts. This week I'm going with 1 Tesla contract, 5 Mara contracts, 10 ALT contracts, and 5 Riley contracts. Here we have the important parameters of the put. Like I said in my wheel video, I choose a strike price based on the delta value of the contract, and I shoot for a delta between around negative 0.2 and negative 0.3. All these prices and deltas are for the contract during the weekend. I'll make sure to adjust these numbers on the Monday market open to make sure that they're accurate. The collateral is how much cash I need to hold the put. After I make my picks, I'll make sure that my buying power is positive so I don't have more collateral required than cash on hand. Next, the best part, the premiums I get for selling the puts. Next week when the put expires, I'll track whether it expired out of the money and I get my collateral back, or they get assigned and I have to hold some shares. In both scenarios, I get to keep the premium. And for this week, that's it. I'll be updating this spreadsheet weekly and post a video to show the performance of the TA wheel versus the S&P 500. Thanks for watching. Please like and subscribe if you enjoyed the video, and I'll see you on the next one.